Hey guys, going to be showing you a couple of the recent volatility contraction pattern trades I've taken. One of those is GATO Silver currently getting out the gate well. The other one is a losing trade, which is a healthcare stock being Eli Lilly. Now for me, I have mental frameworks and there are 4 phases to any individual trade. That's going to be number 1, identify, number 2, control, number 3, mitigate, then number 4, optimize. So I'll be talking about those 4 phases as we're working through it. So let's start off here with GATO Silver. Now the first thing that I look for in terms of the identification part is I like to see the stock and preferably the industry group, sector ETF and or theme displaying relative strength as well. So we have this free RS line, Jack Corsellis RS line, search my name and you'll find it in the TradingView indicator. So what I like to see is a healthy uptrend in the RS line. So you can see that with GATO Silver's nice healthy uptrend, 45-degree angle of ascent, something like that roughly, right? It's a nice strong RS line, and other precious metal miners as well have also been showing relative strength. GATO Silver is actually one of the strongest silver related stocks. It's silver instead of gold. So it's clearly in a nice uptrend here. The stock's up around about 100% or so in the past couple of months, going back to October. There's some nice volume footprints coming through with what I call bullish synchronicity. That's where you get large relative volume and then bullish price action. So ideally you want to see widespread candlesticks opening on the low and then strong closes. Then it starts basing out, building a quasi flag VCP, and I'm going to show you this on the 1 hour chart actually. So it starts building these higher lows in here, starts tightening up around the 1021 EMA. You get this nice trigger bar coming through on the 10 EMA. The volume dries up below the 30-day average as well. Now what I'm going to do is just go down to the 1 hour chart, because this then helps explain a little bit more in terms of the identification part. So what is it specifically I'm looking for? Well, let's just take a look at, on a shorter term basis here, the VCP. So there's four contractions. You can see that each contraction is building a higher low and is roughly halving in terms of the volatility. So we have 1 contraction, we have 2 contractions, we have 3 contractions, then we have 4 contractions. So then I have these mental frameworks, specific things that I'm looking for across multiple time frames in terms of the industry group chart and or the sector ETF or the theme ETF as well, but then also on an individual stock basis too, and the brother and sister stocks. So I'm looking for specific things on the monthly chart, the weekly chart, the daily chart and the 1 hour chart. For the purpose of this video, let's just focus more so on the daily chart and then also the 1 hour chart as well. So I'm looking for on the daily chart that VCP, that flag, that cup and handle to be built. Then I'm looking for on the daily chart a really tight candlestick sitting on one or more of the key moving averages, preferably the 10 EMA and also the 21 EMA, maybe the 50 is there as well, with volume drawing up below the 30-day average. Then when I go down onto the 1 hour chart, I like to see constructed price action like this. Ideally, you can clearly see a flag, a VCP, a cup and handle forming on the 1 hour chart. And then with that daily candlestick where the trigger bar, you've identified a trigger bar. When I then go down to the 1 hour chart, a really nice reference point. You can use the moving averages as reference points. What I like to see is price then consolidating around the 10, 21 and 50 SMA on the 1 hour chart. So looking for specific things on the higher time frames, then looking for specific things on the lower time frames as well. It's just good mental kind of frameworks, mental images that I've just ingrained in my head for where I'm looking for specific things to be happening, all in terms of the identification, because I know that's then going to help me with the initial controlling the risk as well. So let's talk about the initial controlling the risk, and let's just pull this down and I'll just talk about it. Saying we're on the 1 hour chart, I'll just talk about it on the 1 hour chart. So let's do this, right? So in terms of my initial stop loss is here at $4.21, and I'm targeting it with a buy stop limit order through $4.40. So I know I've got my stop over there, but it was 4.44% the initial risk. So then what I'm thinking is we have a previous base high over here. So what I like to do, if I'm targeting a lower pivot, there's going to be overhead resistance within a base. Now, if it's prudent to do so, I like to try and free roll, which is the risk mitigation part, the third phase, the third part of the phase, third phase of the trade. If that's kind of making sense, what I like to do is try and free roll into the base high if I can make the risk versus reward work. So what I'm doing here is I've identified, okay, we have the high of the base here. Is there a prudent opportunity for me to be free rolling into this? Now, there's not actually very much trading that's gone on within this price kind of band underneath $4.70, but it could be a psychological area where price is stalling out. So I'm looking to free roll into that. So what I'm then thinking is, okay, if I'm going to get filled at $4.41 say, and then I want to free roll just underneath that, Okay, so I'm then free rolling in here at around $4.66. I'm then pushing my stop loss up. So I'm then selling 1/3 at 2 times where my new stop loss is going to be. So whatever the percentage figure is here, I'm going to half that, and then I'm going to push my stop loss up if it's prudent to do so. And then there I have then free rolled the trade. So hopefully that's making sense. I'll explain it a little bit more. So identifying, initially controlling risk, then I'm thinking about the risk mitigation element. If I'm targeting a lower pivot within a base, potentially a mid pivot as well, I'm invariably trying to free roll around the high of the base if it is prudent to do so. So what I'm then doing is I'm pushing up my initial stop loss. I'm then pushing it up to $4.28 because I wanted to keep it underneath the 50 SMA on the 1 hour chart as well. So I'm underneath the low of the trigger bar and underneath the 1021 and the 50 SMA as well. Now what I've got in terms of mental frameworks in my head is I'm now moving into the optimizing profits phase of the trade. So what am I looking to do? I'm an intermediate term trend follower, so I'm going to try and ride the intermediate term trend to the best of my ability. So I'm now expecting some form of testing action. After breakouts, the vast majority will undergo some form of testing action. So I've now free rolled the trade. I'm looking for that testing action to take place, then a reversal, and then there is where I'm going to be pushing my stop loss up to about break even on the remaining 2/3, and then I'm going to be looking to ride one or more key moving averages. If price potentially gets extended from the 10 EMA, I'll go lower the day, and choke it off. But there's four phases to a trade. That is how I think about it. Number 1 is identify, number 2 is control, number 3 is mitigate, number 4 is optimize. Now clearly, if you get stopped out fairly early on in a trade, as I'll show you with an Eli Lilly, you're not actually going to make it to the third phase of the trade. So this is Eli Lilly. Healthcare stocks a couple of weeks ago were showing very impressive relative strength. You can take a look at XLV, the sector ETF as well. But see how Eli Lilly, see how this relative strength line is turning up nicely here. You've got 52-week highs coming through, pretty positive reaction to the most recent earnings report, and you have 1 contraction here, 2 contractions here, then it's starting to get nice and tight above the 50 after it just bounced off of it nicely, and then it's tightening up around the 1021 and 50 SM or 10 and 21 EMA in here. Now it puts in this trigger bar the day before, little shakeout demand tail, closes on the high. The volume just drives way up in there. So I'm thinking, okay, I could potentially be looking to target it. Stop loss underneath the low of these last 3 days. That there is 2.33% in terms of the risk. Now it goes early and then it just reverses on the same day. Now I will try and give a stock every single chance, because if you're targeting stocks through these pivot points, you can see it on a GATO silver that I was a day early to the actual breakout when the stock really started breaking out. It happens. You can quite easily be a day early, couple days early, maybe even a week early or a couple weeks early to the breakout. Unlikely to kind of be a couple weeks early, but you can very easily be a couple days early to a breakout if you're trying to target breakouts through very tight areas on the chart. So in here I get filled, and then I move into simultaneously the controlling risk. So my stop loss is then placed here at 359.93, and then you see around about a week later I'm stopped out with this shakeout demand tail here. Price then pulled back down. Maybe it sets back, maybe it doesn't, but the point is I'm not tying my capital up. It's a small relative loss of around 2.5%. I'm out. I can then kind of just assess, is this a stock that I want to be re-entering? If it sets back up, are there other opportunities? So just because you identify a nice looking VCP does not mean it's necessarily going to work out. So it's really focusing on the high quality setups as per your criteria, thinking about the controlling risk, trying to keep it very tight, create asymmetric risk versus reward opportunities for yourself in positions where you think that you can mitigate that risk very quickly. And then for me, it's then about trying to ride those intermediate term trends, which I never have any idea before I enter the trade whether it's going to be 5%, 50%, hundreds of percent, or if I'm going to free roll it and it's going to turn around and I get stopped out within the space of a couple of days. Have no idea. It is then down to kind of variance, aka lady luck in poker, but that is how I think about it over a series of trades. So on any given trade, anything can obviously happen, but it's thinking about things over a series of trades. So thinking it over about tens, hundreds, and thousands of trades instead of just one specific trade and trying to execute my process. So hopefully you found that video helpful in terms about how I think about the trades, the 4 areas of a trade as well. So I think it's helpful to know which kind of phase are you in. Are you in the controlling risk? Are you in the risk mitigation phase? Or are you in the optimizing profits phase? So hopefully you enjoyed that one, and I look forward to seeing you next one.